Welcome back. I hope your tea is piping hot. Nobody decided to bring me some in studio, but I continue. I'm still in studio with Warren Ingram and Almero Oosthuizen. He's the marketing manager at gt247.com, member of the Purple Group. Welcome to you both again. Now, Mr. Warren Ingram, we were talking about shares, contracts for difference, CDSPs, FSB, all of in English.
Okay.
Please.
I have to explain this to my mother-in-law when I get home, so let's do it as if I'm talking to her as well. So ultimately, let's just say we take a share, Woolworths, as an example. It's something we all know. And I'm going to put in 50 Rand a month to buy my shares on Woolworths. Yeah. What happens now is I can't buy the whole share, so I'm going to buy a portion of that share. And that we're all used to, I think, in some ways. We've all bought portions of investments. Unit trusts are exactly like that. Yeah. The risks on something like this would be who actually holds my money. So who tells me when I get my statement, how do I know that that's real? Okay. So one of the things there is this nominee that we were talking about earlier. Ultimately, that's kind of an important party in this whole thing. That nominee you want to know is sitting elsewhere. It's not part of your group. It's not a business that you own where you can write your own statement and say, oh no, sure, you own this. So in this instance, that ultimate body or company is Computershare.
That's right, yeah.
Okay, so that's the eventually where all the lawyers are going to go. If everything falls over, they're going to say, hang on, show us where all this stuff is, show us the register, etc. That's important. So that's good. We tick that box, and then we need to say, well, who's this easy equities, and where do they fit into the deal here? Because again, we don't want to be part of a scam. So one of the things I was doing when we were researching this was to say, okay, who owns them? And eventually, it's owned by a company called Purple Capital, right?
Purple Group, yeah.
Purple Group, okay. Let's not mess up the name. And that sits on a little thing called the stock exchange. Yes. So we know that that's regulated, we know that that's audited, et cetera, et cetera. Look, they can run their business badly and run it into a wall, but what they can't do is just walk away and just steal the money. There are quite a lot of things that have been done and checks and balances that have been put into place to make sure that this all works.
For disclosure purposes, the chairman of Purple Capital has a little show on this, as a little show on this station as well, Mr. Mark Barnes. Yeah.
So he got so bored running this that he decided to run the post office. Eh?
Exactly.
so we've got there are quite a few hurdles that have been gotten through to make this work. Okay. So to me, ultimately, what we need to say to someone that's watching, what I'm going to tell my mother-in-law when I get home is, if you got $50 or $100 a month to save, and you want to buy the brands that you know, then this is a good way to do it. It's going to cost you 64 cents out of every 100. That's really what you need to know.
Sure.
And just to add to that, we also regulate by the FSB, and FSB is also signed off on fractional share rights. So it's all above board in terms of...
So FSB, Financial Services Board, yes. That's the regulator that kind of controls all the investment world in South Africa, and they're kind of difficult to please. So if they've signed it off, at least it means something else. Another box has been checked.
Okay. Yeah. What kind of shares are people buying? I know you can offer it on pretty much any share, but what have you seen of the popular ones?
We're seeing a lot of people actually buying the shares that they know. So exactly the way Warren mentioned it earlier as well, where people shop, where they spend on their cell phones, those kind of shares, those popular brands that are out there are the brands that they buy. And that's sort of investing for dummies, I guess, to a certain extent. And you can't go too far wrong by doing those things. So a lot of those companies on the top 40. So yes, I mean, I would say if you're a novice investor and you don't know where to start, I always encourage people to start with the brands you love and you know and you trust. And if you start there, you can't go too far wrong.
Then there's an analysis of the analysis, and then you start putting peers together. So I've been trying to do the work, famous brands versus taste. Taste, a lot of noise around Starbucks and what have you, but famous brands, much more expensive. When we're now getting down to an individual share, what do we start looking at, Warren? What level of sophistication do we need to do when we're looking at an individual share?
I think you've got to decide from your point of view, what's your time frame on an investment like this? So are you prepared to leave the money for a period of 5 years or longer? First question. That's a critical one, because if you're saying, I'm going to need this money back in 3 years, this is the wrong place for you. You shouldn't be buying shares if your time frame is 3 years. So that's step one. Step two is, you need to understand that the business that you're buying into, is it a profitable business? Does it pay your dividend? I think that's always a good one. CEOs are by nature salespeople, so they're going to stand up there and they're going to give you a heck of a sales story about their company, etc. But the one thing that nobody can market or jargon or spin is the dividend. If that company's paying a dividend every 6 months and every year thereafter, you know that that's real. And to me, that's a great sign. So I like dividends. And then I think if it's got some kind of competitive advantage over everybody else. In other words, what does it do that allows it to stay in business? So let's use Coca-Cola as an example. You know, Pepsi just doesn't sell like Coca-Cola. But it's a really difficult thing to compete with Coca-Cola because their brand's so strong and their reputation, even though it's a fizzy drink and even though everyone hates sugar nowadays, so that's important. So if you're looking at your famous brands example, no one knows what Famous Brands is, but a lot of people know what Wimpy is. A lot of people know what Steers is. And suddenly if you're saying to yourself, look, I shop there, I eat there, and all my friends go there, then that's maybe a good deal if it's paying a nice dividend as well.
But my local Chisanyama is not listed, so I can't actually.
So you can't buy it anyway, yeah.
Tell me our option or universe of stocks. Is it just local stocks or is it international stocks?
So currently it's all the stocks listed on the JSE. We are launching internationals within the next few months, and we'll start with the US and look at about a 500 stock universe of US stocks. So, but we are expanding. So we also we've identified like one of the biggest problems with novice investors is this whole question around what to buy. So we're looking at different ways of making it easier for people to buy the stocks that they love. We're looking at bringing in a concept of baskets, which is a bundle of stocks that you can buy once off that's potentially selected by an asset manager. But instead of like a unit trust where it's unitized, you actually buy the underlying stocks and buy it at the weightings that the asset manager choose to present it to you. So there's lots of new developments inside Easy Equity, so keep an eye out for those. And another thing that we're looking at is loyalty as well. So attaching share ownership with loyalty. So you've got all these amazing loyalty programs on there, but the strongest form of loyalty is actually ownership.
These shares ain't loyal. We're going to have to wrap our discussion right here. Thank you so much at home for watching. I thank my two guests, Almero and Warren. Thank you. Bye-bye.